Hi guys, Will here from WB Trading and welcome back. If you are new to the channel, please do hit that subscribe button and tap the bell icon so that you don't miss any of the free content that we share with the trading community here on YouTube. So before we dive into the video today, I'd just like to say a big thank you to our new content creator, Asri, who's just joined us as a team member recently, who's very kindly helped us out by writing a great handful of articles for us. Asri is a fantastic guy. It's a real pleasure to welcome him to the team. And just to provide some background here, Asri actually joined us as a client almost a year and a half ago, and as a trader who's only ever lost money. Before that, he actually became profitable the instant that he put mechanical rules in place. He's made money every single month since he went live using the rules that we shared with him. And after over a year of using them and with a previous 5 years of experience before then, we're really excited about him sharing what he's learned along the way. Now, if you're on our newsletter, you'll be receiving these articles via email once every Tuesday, and you'll also see them as videos also here on the YouTube channel every Sunday too. And for those of you who aren't on our newsletter yet, you can head to our website wbtrading.co.uk and you'll find the sign up form on the right hand side of every single page on the site. Right, let's get into it. So the question that we're answering together today, should you trade one strategy or more than one? And if so, how many? Well, our first suggestion is never keep all of your eggs in one basket. Okay, why is this? Well, if the basket falls to the ground, all of your eggs will shatter, leaving you with nothing. In the same way, we as traders should always look to actually diversify our trades across both strategies and markets too, instead of putting all of our money in one single place. Diversification. Right, now doing this is proven and it's increased the chances of survival for many traders out there, even during highly volatile market conditions, right? It's the reason property investors don't just own one single property, or why a golf player doesn't just have one golf club, right? It's all about spreading your risk and opening yourself up to opportunity. The concept that we want to introduce today is strategy diversification. And the concept is undoubtedly a key element in managing risk in the financial markets, whether you're trading stocks, foreign exchange markets, commodities markets, whatever instrument that you choose. Now, you may ask, why do I need to diversify my risk and the strategies that I trade, right? Does that not mean I'm going to lose in one market and win in another, thus making my gains small and my progress slow? Well, the question is a valid one and it's an important one. It shows that you understand the big picture. And we'll answer the question together by introducing another concept here called risk diversification. Okay, now risk diversification allows us traders to mitigate the risk of huge losses in case the market suddenly moves against us. Okay, to dive deeper into this, we need to consider combining markets to actually aid the diversity that we're actually looking for. And to dive deeper into this, we need to consider combining markets to aid diversity, and also take a closer look at currency correlation considerations, time zone issues, time frame suggestions, and which time frame fits which trader best. Okay, so when deciding which markets to trade, we need to understand the concept of market correlation. Now, the topic it's somewhat complex, but it is very important to understand because this will actually distinguish you between you and the vast majority of other traders out there who either don't know this or who just ignore it. So let's list some examples of market combinations for you to actually study. Firstly, crude oil and Canadian dollar pairs. So the price of oil and the Canadian dollar are negatively correlated. And this means that when oil prices rise, typically the price of the Canadian dollar will then fall. Secondly, gold and the Australian dollar with the United States dollar currency pair. So the price of gold and the Australian dollar are positively correlated. So Australia has a big influence in gold mining. Hence, when the price of gold rises, the Australian dollar versus the United States dollar will also rise. And thirdly, the Japanese yen and the United States stock market. So Japan is known to be a country with very low interest rates, hence it's the most desired currency for borrowing. Okay, traders generally will borrow in Japanese yen to take advantage of the lower interest rate, convert the Japanese yen borrowings into US dollars, and then invest in the stock market in America. And as such, there's a positive correlation between the United States dollar with the Japanese yen alongside US indexes, such as the S&P 500 as one example. And just as a quick side note here, we've added a reference, this being the Blackwell Global research piece titled Risk Diversification in Foreign Exchange. Very nice. So next, let's discuss time zones. Okay, so as we're all aware, the Forex market is a 24-hour market. And there are 3 important sessions during each day, those being the Asian session, the London session, and the New York session. For traders in Asia, such as in Singapore, Tokyo, Hong Kong, Australia, the currencies in focus would likely be the Australian dollar versus the yen, the United States dollar versus the Singapore dollar, the United States dollar versus the Japanese yen, the New Zealand dollar versus the American dollar, and the New Zealand dollar versus the Japanese yen. And by applying the currency correlation concepts above, traders in this part of the world can actually choose to trade during their time zone and still take advantage of market volatility during the Asian sessions. In terms of applying our own WB trading strategies in Asia, traders can consider applying the price reversion strategy to the Australian stock index as one example of where this edge performs incredibly well and produces sizable frequent profits. And for those of you who are already clients, you can find this data that actually represents this inside the price reversion segment of the course contents inside your account. At this stage, Asri wanted to share his favourite strategy, that being the high time frame bias bar strategy, which can also be used during the Asian session. So as a trader who's based in Australia, Asri's favourite currency pairs to trade are the Australian dollar against the yen and the New Zealand dollar against the US dollar. So he focuses on these markets as they provide him with exposure to 4 major currencies, which again are the Australian dollar, the Japanese yen, the New Zealand dollar, and of course the mighty United States dollar. And having positions in both of these currency pairs actually helps with the currency correlation as well. Next, let's discuss time frame suggestions, okay, which may suit a trader best. So many traders, including Asri and myself too, have a pretty busy life, okay? We all do, right? And Asri is also happy to share that he's just welcomed a newly born baby boy into his family as well, which was really great to hear. He's Asri's 3rd child now, along with an 8-year-old boy and a 4-year-old daughter. And as you can imagine, life can be pretty hectic for him to say the least, right? Now, he did mention earlier that his favourite strategy of the 4 key strategies that we actually trade here at WB Trading is the higher time frame bias bar strategy. And because of how easy to trade and how hands-off this edge actually is, requiring just minutes per day, this strategy works really well for him in his busy everyday life. He just has to check the charts every 4 hours, due to using a 4-hour time frame. And he also focuses on, again, just those 2 currency pairs specifically. And what this does is it solves the time zone issue and the currency correlation issue, along with the also having a busy life issue on top of that. All in one strategy, every single problem solved. And since we're on this topic, I'd like to also talk briefly about the concept of less is more. See, many traders out there think that in order for you to make money as a trader, you have to open lots of positions on many markets throughout each trading day, and you have to make hundreds of trades a month, and so on. And for Asri, it's all about quality over quantity. Now, for those who are clients of ours, we all have 2 short-term intraday strategies and 2 long-term swing trade strategies at our disposal. Okay, and this is more than enough for us to be consistently profitable traders, as we all are. The key is as I mentioned continuously, is letting the probabilities play out, letting Edge play out. Okay, and in Azri's experience of using our strategies, along with being disciplined in his risk management, the results always come. If you think about it, every time we lose just -1R. And when we make a profit, we make, well, many times that, sometimes well into the double digits, okay? And in Azri's case, via the bias bar strategy, when he is right, he makes 3R, which is the target that he personally likes to use via that strategy. And since January 2021 to date, he's actually grown his account by dead on 15R, by just doing the exact same thing every single day. Every time he just places a trade and he just considers the golden rule. 1, he risks no more than 1% of his capital, and 2, he takes profit at 3R, again, via the bias bar strategy. And he checks his charts every 4 hours only for just a minute or two. In essence, his trading day is, well, it's just minutes long, and he's profitable continuously. Let me ask, how many minutes or hours do you trade every day? If it's longer than a single hour, in many cases, you might actually be doing something wrong. Now, for people busier than Azri, we have good news for you too. The daily time frame can also be used to actually trade that higher time frame bias bar strategy. Now, granted, you may not be in an open position all of the time, but you do have the luxury of having a larger stop loss, allowing you to weather short-term fluctuations in prices. And as an added resource, participation in our mechanical alert group, which is open for clients only, can also be pretty useful too, as the trader who runs this does all of the work for us in finding trades, making us aware of the orders that he's placing, and so on. All we need to do is literally copy his trades all day, each day, and that can be a real help that a lot of clients really find valuable. Again though, this is not available publicly, it's simply an add-on for existing clients. Azri also mentions that he's actually been really impressed with the trader's performance across this year specifically. Now, before we end, Azri wanted to address a trading consideration for any America-based traders, this being that the session momentum strategy can be utilized with the S&P 500 index with pretty favorable results. Again, we've added the relevant data to the course portal for you to actually illustrate this. As for our price reversion strategy, again, the ASX, the Australian Stock Exchange Index, is also suitable for America-based traders, as the reference time is actually using Sydney's time zone. So you see, for American-based traders, they can actually trade in the morning using perhaps the S&P index. They can then go to work, spend time with their families, and then in the evening, they can trade the ASX index too. And in between, of course, they can also check for bias bar trades via the United States dollar-based currencies, meaning very minimal screen time, very profitable trading results with very little stress on top. It doesn't get much better than that, does it? So what to do next? Well, firstly, make sure that you aren't trading correlated markets. It's a big no-no. And on top of that, secondly, most importantly, make sure that you're trading with Edge. And if you aren't, we can help. Head over to our website and you'll find our strategies waiting there for you if you need them. Anyway, we hope that helps. We hope that's added value for you. And from me and the team here at WB Trading, trade with Edge, with consistency, and we look forward to having you back here on the channel soon. Thanks, guys.